4 years. The Iraqi Dinar IQD has been one of the most closely watched yet mysterious currencies in the global financial market. Currency holders, Forex traders, and even ordinary Iraqi citizens have been waiting for the day when their money could reflect its true value. As we move deeper into 2025, there is once again a strong buzz in the market that a surprise boost could be on the horizon. And Forex signals are showing rising strength that cannot be ignored. The speculation isn't just about small adjustments in the exchange rate, it's about the possibility of a major revaluation for Iraqi dinar holders, both inside and outside the country. This could mean a life-changing financial reward. Across social media, forums, and trading communities, the phrase is "the IQD finally ready to rise" is gaining traction. What makes this moment particularly exciting is the combination of reforms within Iraq's financial system and growing confidence in the nation's economic stability. Unlike past years, when rumors often outpaced reality, this time there are concrete signals from Forex markets, central bank policy changes, and rising oil-backed revenues that suggest something significant is indeed happening. In this article, we will break down Iraq's currency journey, the reasons behind renewed optimism, the risks that still exist, and the potential outcomes for holders of the dinar. The Iraqi dinar was first introduced in 1932, replacing the Indian rupee, which had been in circulation during the British Mandate period. For decades, the dinar was a strong and respected currency, reflecting Iraq's rich oil resources and relatively stable economy. At one point, in the late 1970s and early 1980s, the dinar was worth more than $3 per IQD, placing it among the strongest currencies in the world. However, this strength did not last. The Iran-Iraq War, 1982-1988, followed by the Gulf War in 1991, and later the U.S. invasion of 2003, devastated Iraq's economy. Inflation soared, foreign reserves drained, and the country's financial credibility was shattered. The once proud dinar plummeted in value, and Iraqis saw their purchasing power vanish almost overnight. In the aftermath of 2003, Iraq's central bank worked with international organizations to stabilize the currency. The dinar was redenominated and pegged at various levels, eventually settling at rates that made it accessible but weak compared to its historical value. For ordinary Iraqis, this meant daily struggles with fluctuating prices, reliance on the US dollar in many transactions, and an ongoing sense that their national currency no longer represented the true potential of their oil-rich nation. Through the 2010s and into the early 2020s, discussions over revaluation RV of the Iraqi dinar became common among investors. Some saw it as a speculative gamble. Others believed it was only a matter of time before Iraq's economic recovery demanded a stronger currency. Fast forward to 2025, and Iraq finds itself at a crossroads. Unlike earlier periods of speculation, this time the foundation appears stronger. Foreign reserves have reached record highs. Oil exports remain steady and profitable. Banking reforms are underway. With the central bank tightening controls on dollar outflows, lower denomination notes are being introduced, a key step toward revaluation. For dinar holders, this history explains both the caution and the excitement. They've seen false starts before, but they've also never seen Iraq so determined to assert the strength of its national currency. If the IQD truly begins to climb, it will mark not just a financial shift, but a symbolic restoration of pride for a nation that has endured decades of hardship. As of 2025, the Iraqi dinar's exchange rate remains a central topic of discussion in both local markets and international Forex circles. Currently, the official rate is pegged around 1,310 to 1,320 dinars per US dollar, depending on daily fluctuations and central bank policies. While this may look like a stable figure on paper, the reality on the ground is far more dynamic, especially when comparing the official rate with black market prices and Forex-driven speculation. One of the most important aspects of Iraq's monetary system in recent years has been the dual exchange rate problem. For a long time, there was a wide gap between the government's official exchange rate and the parallel market, black market rate. This gap not only fueled corruption and smuggling, but also undermined confidence in the dinar itself. People often preferred to conduct business in US dollars, further weakening the domestic role of the IQD. However, In 2024 and leading into 2025, Iraq's central bank CBI has taken aggressive steps to close this gap. By tightening controls on dollar transfers, increasing monitoring of foreign currency auctions, and boosting Forex reserves, the bank has managed to narrow the difference between official and unofficial rates. This has sent a powerful signal to the Forex market. The dinar is becoming more credible and more stable. At the same time, Forex traders are noticing an unusual pattern in the dinar's behavior. Technical analysis suggests that demand for the IQD is slowly rising, particularly in regional trading hubs. With oil prices stable above $80 per barrel and Iraq's exports generating consistent revenues, the country is accumulating billions in reserves. These reserves serve as a shield for the currency, allowing the CBI to defend the dinar against volatility. What's truly fueling speculation, however, is the chatter about lower denominations. Another trend worth noting is the shift in Forex sentiment toward Middle Eastern currencies in general, with oil-rich nations like Saudi Arabia, the UAE, and Qatar seeing stronger financial positions. Investors are beginning to look at Iraq as an undervalued gem in the region. While risky, the potential upside of holding dinar is much larger compared to more established currencies. For the average Iraqi citizen, these Forex shifts mean two things: greater confidence in using the dinar at home. Instead of relying so heavily on US dollars, hope for a stronger purchasing power. As rumors of a surprise boost or revaluation continue to spread, in summary, the current Forex landscape shows a currency that is still weak by global standards, but with rising strength signals that are hard to ignore. For traders, this is the perfect combination of risk and opportunity. For holders of the dinar, it may just be the long-awaited turning point. The Iraqi Dinar IQD is back in the spotlight as Forex markets show rising strength, and speculation grows about a potential currency boost in 2025. With the official exchange rate currently around 1,310 per US dollar, recent reforms and central bank actions have triggered optimism among both local holders and international investors. The Central Bank of Iraq CBI has been taking major steps to strengthen including introducing lower denomination notes, increasing foreign reserves, and tightening controls on dollar outflows. These moves signal that Baghdad is preparing for a stronger currency and possibly a revaluation, sparking excitement across trading platforms and forums worldwide. Iraq's vast oil revenues provide a financial cushion, giving confidence that the dinar could maintain stability even if exchange rates shift. For everyday citizens, a stronger dinar means improved purchasing power, cheaper imports, and reduced reliance on the US dollar. For international investors, it represents a potential high-reward opportunity, with years of low-value holdings possibly delivering substantial gains. Experts caution that risks remain, including inflationary pressures and black market activity. However, the momentum is undeniable. The Iraqi dinar is showing real signs of rising strength, and holders may be in for the surprise boost they've been waiting for.